Good morning, students. Welcome to the session. So, today we are going to continue our earlier topic, which is the basic concepts that we were discussing, isn't it? So, let us just quickly revise before we proceed ahead what we have done in the last class so far. वीडियो विजिबल नहीं हो रहा है क्या? कुछ तो प्रॉब्लम आ रहा है. बाहर है क्या? हाँ, एक टाइम तो मुझे भी दिखा. डिस्कनेक्ट करके फिर से ज्वाइन करूं? जी. हाँ, वीडियो ऑन नहीं हो रहा है. स्क्रीन शेयरिंग भी स्टॉप्ड है.
अशोक जी, मैं एक प्रेरणा को होस्ट ना.
गुड मॉर्निंग मैम.
गुड मॉर्निंग प्रेरणा. ट्राई नाउ प्रेरणा.
जी. Yes, I think now everything is looking fine.
Yes.
Okay, let's start with it. So, what we have done, students, in the last class, first we were talking about like section 4. What does section 4 talks about, students? Very quickly, let's just revise together. What does section 4 says? Yes, we had talked about section 4. What does it say? The charging section. Yes, 4 is the charging section, Guram. But what does it provide for?
Total income in the previous year shall be charged of the SSC to the income tax at the specified dates prescribed in the income tax.
So, see here, one mistake that you made is total income of assessee. Now, assessee word is very different from the word person. So, whenever in exam we are writing, see, that's the whole point of revising, reiterating the same section again and again. Because whenever we are writing in exam, we don't have to use the word assessee where the word person is used. Or where the assessee is used, we can't use the word person. So under the income tax, it is very important that we use the words as is. This is law. The word, when you change it, the meaning will change altogether. Right? That is very specifically with the adjectives, the pronouns, whatever we are using, right? So, anyways, total income of every person shall be charged or assessed to the income tax at the rates specified in the Central Act in the assessment year, right? Now, what is total income, students? Yes, what is total income? Yes, Manpreet, right? What is total income? Yes, students, very quickly, fast. We have to revise and close it. Total amount of income, yes, Manpreet, but can you define fully? Means it includes all heads of income. Okay, Guram. Total amount of income, Chitra, referred to in section 5. Yes, that's right, Pitambar. So, total amount of income referred to in section 5 computed in the manner laid down in this act. Right? That's what the total income definition says, isn't it? Total amount of income referred to in section 5. What is section 5? What is section 5? See,
Scope
Guram,
of income.
yeah, scope of income, except exempt income, which is not added in total income. So that is something which is not provided in the definition. What it says is computed in the manner laid down in this act. An exempt income will not fall within the definition of income itself. Okay. So 5 is scope of total income. Computed in the manner laid down in this act means what? We have to follow the different heads of income. Right? Now, what is income? Income is defined in 224 in the inclusive definition, right? Total income of every person. Who is a person under the income tax?
Individual HG of AOI, BOI, artificial persons, BOI, firm,
Firms,
firms, LLP.
right? Total income of every person shall be charged or assessed to income tax at the rate specified in Central Act. What are the rates specified in Central Act?
There will be general rates and specified rates.
Correct. Yes, that's right. So what are the general rates? Where are they defined? Yes, Miruna,
Section,
that's correct.
First
section
schedule.
1
Yes,
schedule.
first schedule. That's right. In the Finance Act, right? So first schedule to the Finance Act. It talks about, yes, tax rates, right? Part 3. Part 1 talks about the assessment year. Part 3 talks about the current previous year. Yes or no? And where are the specific rates given?
Section 111, 112A, 111A, capital.
Right. Under the income tax, right? Now, income of the previous year shall be charged or assessed to tax in the assessment year, right? What are the exceptions to this rule?
Shipping business income and person leaving India, having no intention to return in India, and the firm which is going to AOP or BOP which is going to be dissolved or demerged.
Correct. That's very good. So, non-resident engaged in shipping business, person who are leaving India, AOP or BOI formed for a particular purpose, discontinued business, persons likely to transfer property to avoid the tax, right? So in these cases, the income of the previous year shall be charged or assessed to tax in the same previous year. Yes, Miruna, correct, right? So this is the exception, right? Now, we then started with also we discussed, about the interpretation provision. I'm not, revising that because that is, was more or less we discussed about the rules of interpretation. We also discussed about like what is income tax act, how we have basically understand it along with the income tax rules, the circulars, the notifications. Yes. So what are income tax rules? Just quickly, if you can answer me. Yes, what are income tax rules, student fast? What happened? You were talking about the technical concept so well. What is the income tax rule? Yes, Guram. Income tax rule which ITR to be selected to file return. That is like very specific rule. But what are the rules? Like in
Like proper
if I have to
administration
say.
purpose, proper administration purposes,
That is
These are
right.
the administrative guidelines,
Correct.
guidances.
Not guidances in a way. These are not administrative guidances. Yes, Manpreet, very good.
Like
Provision says
interpretation of law.
no, it is not interpretation of law. Manpreet, you said provision says what to do. The Income Tax Act provision says, section says what to do, and the income tax rules tells you how to do it. So
How to do it.
basically, income tax rules which are there, they give you the like provision, or they give you the idea about how to basically implement the act, right? So basically, let's say for example, if the act says that this section benefit can be availed only when this form is filed, which may be as notified. Now it may be notified in the rules. So this form, the practical application of that rule can only happen by way of a form. So that form will be notified in the rules. Or the Income Tax Act may says that the HRA deduction shall be claimed subject to the limits as may be notified. Now, as may be notified where? In the rules. So the rules will give you the limits of the exemption of HRA. Right? Like for example, if you see section 10 tells you that exemption shall be there in respect of these allowances which are granted in respect of the employment, right? So where you have food coupon allowance, where you have leave travel allowance, all of these. Now where are these limits notified? In the similarly, if the perquisites tell you that perquisites up to this limit are not taxable. So where are those notified? Those are notified in the rules. So any kind of limits, any kind of forms which are there, that comes from the income tax rules. So Venkata, it is not prescription of the act, it is to make the act workable. So all the administrative provisions, the limits, the forms comes through the rules. What is the CBDT circulars? What are the CBDT circular? Yes.
For clarification.
Clarifications.
Correct. So CBDT has the role to clarify the provisions wherever there is ambiguity. Yes, Guram. These are clarifications, right? So, yes, Venkata, these are binding on the revenue and not on the assessee. Why is it binding on the revenue? Why? What did we discuss? Why is it binding on the revenue?
Because it is the direction of their bosses only. So they
Correct. Because CBDT is constituted by the Department of Revenue only, right? CBDT is a body, statutory body constituted under the Department of Revenue, Ministry of Finance, under which there are the income tax officers. So CBDT's entire role is to issue the administrative guidance for the application of the Income Tax Act, right? So that is something that the revenue officers will have to follow. Assessee can follow only if it is beneficial. Then what are the notifications? Yes, Guram, notification is introduced to notify the some applicability of the provisions or new section, not new section. The section is only or can be notified only by way of amendment to the Finance Act. Notifications can't amend the act because these are the just notifications issued by the central government, but the act can only be modified. A new section can be introduced, a section can be modified only through the amendment carried out through a bill, which is the finance bill, right? So notifications are basically to notify something, some statutory authority, some provision, some faceless assessment, some anything you have to notify, that is to be through the central government or the CBDT notification. Notifications, yes, are binding to the assessee. Yes, circular is only binding to the AOs, but notifications are binding to the assessee. Yes, Karan, that's correct. Clear? Now, then we have to also look at the Finance Act, right? Finance Act introduces the amendment to the Income Tax Act, right? Through the finance bill, through the union budget, this Finance Act gets introduced, right? And we also have to look into the memorandum to the finance bill. What is memorandum to the finance bill? Yes.
Explaining the background of the amendments that has been brought into.
Correct. Explaining the background, why a particular amendment has been introduced, that is explained through the memorandum. Why is the bill, Venkata? Bill is basically the finance bill which introduces the amendments, right? So that is the finance bill. That has to be read, which becomes the act eventually. So that has to be read along with the income tax act, because that brings the changes to the income tax rates, that brings the changes to the various provisions of the income tax act, right? Next, what is the cases? How are the cases to be read? Like, can you rely on the ITAT ruling of the other jurisdiction? Let's say assessee is from Mumbai or AO is from Mumbai. Can they rely on the ITAT ruling of Bangalore?
No.
No, ma'am.
Same
Right?
jurisdiction, ITAT or
Correct. Only the jurisdictional ITAT, right? So, only the jurisdictional ITAT we have to rely. The reason I told you was what? Yes. What was the reason that I discussed? That
Because
here,
that's very
yes,
the different circumstances.
not
can
different
be challenged
circumstances.
upon by the respective jurisdiction high
Doctrine
court,
of
and
state.
different high court may give different decisions, so there will be class of like.
Correct. Yes. So basically, let's say, for example, the ITAT is all with the appellate forum to ITAT is High Court. So that is bound by a particular High Court also, right? So when the ITAT gives the ruling, they have this basically jurisdiction over a particular area. Now, if the, let's say, one ITAT is given the ruling and that has been appealed to High Court of another jurisdiction, right? Let's say Karnataka High Court. Now, whether that can be applicable, answer is no, because the jurisdiction of High Court is only towards a particular area, right? So Mumbai will not be bound by the Karnataka High Court ruling. So same goes with the High Court, right? There is this concept of stare decisis, that you have to be bounded only by the previous court's ruling, right? Then Supreme Court ruling is
Is
applicable all across the country. Right? Yes, Venkata, if the ruling is beneficial, then of course they can rely. But if the ruling is negative, you may say that that is not applicable. But as far as the AO is concerned, AO can also apply the beneficial one, but not the, no, the AO can apply the beneficial to him, but if it's against, he can reject it. Guram, HUF, you can ask me the question, but I'll be able to clear it only when we reach to the particular class where we are discussing about the HUF taxation. But of course, you can ask if it's a very, basic question. I'll be happy to answer here. Okay. Why person will create the HUF even though they are filing one ITR as individual? Same person is also filing the ITR as ITR and both treating as different person. Is this tax planning? Yes, somewhat. It is. HUFs are used for as a tool for the tax planning. That's right, Guram. Right? Now, moving ahead, what are the explanations that we discussed under the Income Tax Act? What are the explanations? Yes. What are the explanations? Provisos and explanations we discussed. Sorry, I think I stopped it. What are provisos and explanations? Very quickly. Provisos are exceptions. Yes, that's right. That's correct. 1 second, just give me a moment. Sorry, I think. Yeah. Yes, provisos are exceptions. Yes, that's right. Manpreet, but what are explanations?
Explanation of the act, what it is there in the act, and we have
Correct.
to interpret harmoniously with the act. Explanations
Correct.
and provide.
Correct. So explanations basically clarify the what is written in the section. Yes, Guram, that's correct. So explanations maybe define something. Yes, Richa, that's right. And provisos are exceptions, right? So let us start with now the tax rate. What are the two regimes that the individual has?
Old regime and new regime. New regime is under section 115 BAC, where no deduction is allowed. And if we opt out for old regime, once we cannot move again to that.
We have to, like, the default regime is 115 BAC. If we want to opt out of that, we have to select the option of opting out, right? So it is not that we opt out from the old regime, we opt out from the new regime, right? Yes, Manpreet, that's correct. Yes, limited deduction, Guram, in the default regime. So the 115 BAC is the provision, right, which has changed the tax rate for your attempt, which is after the 1st April 2025. Now, what are the tax rates under that?
Up to 4 lakh nil, 4 to 8 lakh 5%, and 8 to 12 10%, 12 to 16 15%, and 16 to 20 20%, above 20 30%.
About 20 to 24, 25%, and above 24, we have 30%, right? So up to 4, nil, 4 to 8, 5, 8 to 12, 10, 12 to 16, 15, 16 to 8, 20, 20, and then 20 to 24, 25, and above 24, it is 30%, right? Now, under the 115 BAC1, these are the, yes, Richa, that's correct. These are the tax rates that you will have to remember. Yes, Yogesh, you have to increase by 4 lakh and the slabs, and you have to increase by 5% the tax rate. That's correct way to remember. That's right. Right? Yes, Guram. Now, this is 115 BAC. And what are the tax rates under the normal tax regime?
Up to 2.5 lakhs nil, 2.5 to 5%, 5 to 10, 20%, above 10 lakhs, 30%.
Correct.
For again, residential individual, senior citizens greater than or equal to 60 years and less than 80 years, up to 2.5, it will be up to 3 lakhs nil, and remaining it will be same. 3 to 5, it will be 5%, 5 to 10, 20, and above 10, 30%. And super senior citizens greater than or equal to 80 years, up to 5% nil, 5 to 10, 10%, above 10, 20, 30%.
Correct. That's right. Now, this higher tax slab for the senior citizen is basically for a resident senior citizen, right? If you are a non-resident senior citizen, then in that particular case, you have only the first slab which is there up to 2.5 nil, 2.5 to 5, 5%, 5 to 10, 20%, and greater than 10, 30%. Only when you are a resident individual more than 60 years, less than 80 years, you go into the second. And then if you are a resident individual more than 80 years, then you have the third. Venkata, I mean, see, the government is adjusting the slabs with the inflation. That's the reason why you see year on year 115 BAC gets updated. So now that under the 115 BAC, they have said up to 12 lakh if you have income, there will not be any taxation. Yes, Guram, that's right. If the assessee is a non-resident senior citizen, then only the individual rate is applicable. Correct. Okay. They are not changing the old regime because their intention is that more and more people should opt for the default regime, which is 115 BAC, and that's the reason why they have treated it also as a default regime. They want that people should not claim more deductions, more exemptions, because unnecessarily people were claiming the fake exemptions, deductions, and they had to verify, they had to issue notices. So that cost is also involved from the tax administration side. So 115 BAC is a very simpler regime where you don't claim much exemptions and still you are getting the higher tax rates, right? So that's the reason why they are only changing the default tax regime. They are not changing the optional regime, right? Okay. Now coming back to the 115 BAC. But if non-resident opt default regime, then residents and non-resident are equal. Yes, Guram, that's right. So under the default regime, there is no bifurcation between a resident senior citizen or a non-resident senior citizen, right? Now coming to the 115 BAC. Okay, let me share the act to you. Okay. So we had seen that this is what 115 BAC says, that these are the tax rate. Now it says for the purposes of subsection 1A. What was subsection 1A? This is basically saying that notwithstanding anything contained in this act. What does this mean? Notwithstanding anything contained in this act is what? We had discussed that.
Non-obstant clause.
That's a
Non-obstant clause.
non-obstant clause. Correct. Very good. So this overrides the other provisions of the act, right? But subject to the provisions of this chapter, right? We'll see this particular point. The income tax payable in respect of the total income of a person, right? Total income, we saw what is total income under 245. Being an individual or HUF, AOP other than a cooperative society or BOI, whether incorporated or not, or an artificial juridical person other than a person who has exercised an option under subsection 6. What is this option they are talking about? Yes. Yes, what is the option they are talking about? Opt out. Yes, Manpreet. That's the option to opt out of default tax regime. Not from the act itself, Guram. Tax regime. Option to opt out. Yes, Venkata. That's right. Yes, Chitra. Guram, I'll tell you how to read the act, because that's the reason why we are, reading from the act itself. So, we are doing it from the act itself. So you will get an understanding how to read. That's what we are going to do now, right? So basically 115 BAC 1A is saying that notwithstanding anything contained in this act. The first part says means it overrides all the other provisions of the act. But it is still saying that I am subject to the provisions of this chapter. So whatever the tax rates that are given in this chapter, the chapter of the tax rates, I am subject to that. So what it is essentially trying to say is, if you look at 115 BAC, see, let me paste the section here so that I can break it for you. Right, this is what our section says. So this first part of the section, which is saying notwithstanding anything contained in this act. So what does this essentially means? That this will override all the provision of the act. Right? This will override all the provisions of the act. This is my non-obstant clause. That day we learned what is a non-obstant clause, isn't it? So this is my non-obstant clause. Right? Now it is saying that I am still subject to the provisions of this chapter. What does this mean? So even though it is saying I will override all the other provisions of the Act, but except one. The tax rates, one second. Specified in the chapter of tax rates will continue to apply. So what does this mean? Yes, I'll zoom it a little bit. Yes. So what does this try to say? That notwithstanding anything contained in this Act, basically 115 BAC is saying that whatever deductions, exemptions only I am saying, that should be applicable. So chapter 60 deductions are available to you when you compute the total income. But 115 BAC, when it overrides all the other provisions of the Act, meaning it says that whatever I am saying, only that has to be allowed while computing the total income. So when it overrides all the other provisions of the Act, it essentially means that whatever exemptions or deductions specified in 115 BAC are only allowed. Yes or no? Subject to the provisions of this chapter, meaning it is saying that even though I have given here the tax rates, but here basically we will still be subject to if any other special rates are defined under the Act, then those rates will continue to apply. For example, for long-term capital gain on the listed shares, the tax rate are given under 112, right? Or 112A, correct? So the Act is saying, or the 115 BAC is saying that even though the tax rates I have given under 115 BAC, but if there are any special tax rates already given in this chapter, for example, for 112, 112A, 111A, then I will not override those rates. I'll still be subjecting the total income to those rates. Are you following that? So for long term, short term, any other specific, like for example, on patents, there is 115B, there is tax rate of 15%, 10%, right? Then if you have like ADR, GDR, then there is 10%. For foreign portfolio investor, there is again special rate of 10%. So that special rates will be continued to be applicable and not the rates which are given under 115 BAC. Are you following that? For example, for undisclosed income or unexplained investment, the tax rate is under 115 BBE 60%. For winnings from lottery, racehorses, gambling, all of that, it is 30%. So that the special rate will continue to apply and not the general rate which is given under 115 BAC, because the Act says, the 115 BAC says notwithstanding anything but subject to the provisions of this chapter. This chapter is about the tax rates. So if there are any specific tax rates given on particular income, then those tax rates will apply and that will not be override by 115 BAC. Are we following this? Yes or no? Yes, students? So it is saying that the special tax rates, if any are there, then that will be continued to be applicable. Clear? So therefore, when we talk about the 115 BAC, So these are the tax rate on income, or let me say I've written above only. So there only I'll make it. Yeah. So I've said that this is the default regime 115 BAC for all income other than covered under the special rates, right? So this is one, and within that, any other income chargeable at special rate, then rate specified. So for example, you can write down here 111A, 112, 112A, 115 BBE, right? Like that. Are we clear about this, students? Yes? Okay. So 115 BAC is telling you that you have to basically consider this particular way. Okay. Now, if you look at again 115 BAC, it says income tax in respect of the total income. We have understood what is the total income. See, total income is, we have seen this is defined under 245. Of a person, here they don't use the word assessee, again the person, which is defined under 231. Being an individual, HUF, AOP, BOI, right, or an artificial juridical person, other than a person who has exercised the option under 6, which is the option to opt out. Are we clear how we are reading the section? Fine, then they have given the tax rate over here. Now, they are saying for the purposes of this subsection 1A, basically this section only, the total income of the person referred to therein shall be computed. So they are saying that the total income, they are not using the word in like income as computed here, they are saying total income, means you compute the total income as you do it, considering the section 14 to section 19, right? So you consider the total income as you compute, right? Considering how the provisions of house property say, salary say, PGBP say, you compute the total income in that way, because total income is what? The income, total amount of income referred to in section 5, computed in the manner laid down in this act. So you compute in the manner laid down in this act. But what you don't have to consider is this: without any exemption or deduction under the provisions of clause 5. Clause 5 of section 10. Can anybody tell me what is 10.5? Yes, what is 10.5? Let us look what is 10.5. Exempt income, that I know. Section 10 is income not included in total income. We are going to do on Tuesday this particular section 10 itself. But what is 10.5? So in the case of an individual, the value of any travel concession or assistance. What is this? LTA. Very good.
Leave travel allowance.
Correct. Very good. LTA, Yogesh. Yes, that's correct. So the first exemption which is denied over here is, so you can write down without claiming exemptions under or exemption of. First is the leave travel allowance, right? Second, they are saying on clause 13A of section 10. Now, what is 13A of section 10? Let's look at it.
HRA.
Correct. Any allowance, any special allowance specifically granted to an assessee by his employer to meet expenditure actually incurred on or payment of rent in respect of residential accommodation. So this is nothing but the house rent allowance. So HRA. Then or prescribed under clause 14 of section 10. What is prescribed under clause 14 of section 10? Any such special allowance or benefit not being in the nature of perquisite, specifically granted to meet expenses wholly necessary and exclusively incurred in the performance of the duties of an office or employment, as may be prescribed, to the extent to which such expenses are actually incurred. Which are these expenditures? Any idea?
Conveyance allowance.
Correct. What others? Yes. Reimbursements? Not really. Reimbursements are not allowances, Manpreet. So 10, 14 are the special allowances. See, as they say, as may be prescribed. Now, where is it prescribed? Hostel education. Yes,
Rules.
Venkata. Yes?
Rules.
Correct. So whenever see the section says as may be prescribed, right? So when it says as may be prescribed, this is prescribed under the rules itself, right? This is prescribed under the rules itself. So when it talks about as may be prescribed means you need to go back to the income tax rules. Are we getting this particular point? So here it is not specified. Here they are saying any special allowances. Right. So now if you want to read this, where is it defined? You have to go to the see, here they have given the list of the rules. So in the rules, you will get an understanding as to where these are prescribed. Right. Or this will talk about that what are the particular allowances which are available under section 1014. Now, if you look at this rule 2BP, right? This, if you go it, this particular rule says, now for the purposes of 1014, 1, prescribed allowances shall be the following. See, the act gave you any allowances as may be prescribed will be exempt. Now, the act is not wanting to, put everything over here. Because what will happen is if I put everything under the act, now if I want to delete this allowance, like if I want to remove this allowance now, or if I want to amend the limits of this allowance, I will have to make an amendment through the, yes, I will have to make a finance bill. Correct. And that is a yearly process, isn't it? That's a yearly process. So if I want to, add something mid-year, that is not possible. So that's the reason why I've kept it separately in the rules. Because rules can be amended by way of a notification. Are we clear? Venkata, how to know which rule is the particular rule for the provision? See, when you read the Bare Act, there they have given in the Bare Act, what is the provision connected to that particular, what is the rule connected to that particular section. So for that, you need to buy a Bare Act where you will get an idea. On the this portal, you will not exactly get the linkage. Okay. So 1014 prescribes these kind of allowances. What are the allowances? Allowances to meet the cost of travel, travel allowance, right? Any allowances which is granted on tour, that is also not allowed. Any allowance granted to meet the expenditure on conveyance, which is the conveyance allowances, tour allowances, travel allowances, helper allowance, right? Academic research and training allowances, uniform allowances, right? So these are not allowed. In fact, the special compensatory allowance, right? In these remote areas, tribal areas, any allowances which are granted for the transport, right? Children education allowance, any allowance for the hostel expenditure, compensatory field area allowance, right? These are not allowed. Transport allowance, all of these allowance are not allowed under 115 PAC. But wait, something is written over here. What they have said is, they have said that notwithstanding anything contained in 1 and 2. What is 1 and 2? These allowances, the list of these allowances that they have given in 1 and 2. The 2 prescribes the limit for the allowances. The 1 is writing that these allowances are allowed under section 10. But it says notwithstanding anything 1 and 2, an employee being an assessee who has exercised the option under subsection 5 of 115 BAC or whose income is chargeable to tax under 115 BAC 1A shall be entitled to exemption only in respect of the allowances mentioned in subclauses A to C of subrule 1. What were A to C of subrule 1? So basically what it's saying that even though all the allowances are not allowed, we will still allow these 3 allowances in respect of 115 BAC. So means travel, the transport, the tour allowance and the conveyance allowances will be allowed. All other allowances will not be allowed. Are we clear? So this is different from the transportation allowance of the 3,200 and 800, right? So this, if you see, the transport allowance which is given over here, where is it given? Yeah, this 3,200. This is separate. We are not talking about this. We are talking about the conveyance allowances which are there. So conveyance allowance will be allowed because the rule itself is telling over here that only one under rule subrule 1 A to C, which is covering the the travel, tour and the conveyance allowance will be allowed. And serial number 11 of the table, which is serial number 11 is for this transport allowance. Then they are specifically saying that this for the handicap will be allowed, not for every other person. Right? So what are therefore the allowances which are allowed under 115 BAC? What are the allowances which are allowed under 115 BAC? Yes, very quickly.
Travel, tour, conveyance, and transport
Correct.
for the blind person 3,200 per person.
Correct. Correct. So basically, let's write down over here. Without claiming the exemption of any special allowances prescribed under section 1014. Example, helper, uniform, etc. Right? But what is allowed is tour, travel, conveyance, allowances plus the transport allowance for handicap of rupees or up to rupees 3,200. These are allowed. Are we getting it? Yes or no? So this is how you have to read the act. Clear? Okay. Then let's go back to the subsection 1A or subsection 2 only. So without any exemption or deduction under 10.5, 10.13A or prescribed under 10.14, other than those may be prescribed for this purpose, right? Other than those as may be prescribed for this purpose means other than those which are given under 10.14 rule 2BB, which are to be allowed for the 115 BAC, right? Or clause 17 of section 10. What is 17 of section 10? Any income by way of daily allowance received by the member of parliament, state legislature, right? So basically allowances which are received by the member of parliament. These are also not allowed. Right? So these will also be not allowed. Then or clause 32 of section 10. What is 1032? Yes. In the case of an assessee referred to in 64(1)(a), any income includable in his total income under that subsection, to the extent such income does not exceed 1500 in respect of minor child whose income is so includable. What is this section? Can anybody identify?
Clubbing of provisions minus.
Correct. Clubbing of minor's income. So under that, you get the exemption of 1500 rupees for each minor child, right? So this exemption will not be allowed. Yes, Venkata, that's right. So basically, exemption under section 1032 for minors income of rupees 1500. This is also not allowed under 115 BAC. So in case the question comes in exam where they show you the minors income, but when you claim the 115 BAC, you will include the income but will not give this exemption. Section 10AA. What is section 10AA? Yes, what is section 10AA?
Leave encashment?
No. 10AA is the exemption for the units in SEZ. So this is for units in SEZ. This is a deduction for the units in SEZ. This will not be allowed as well. Richard, that's not agricultural income. This is for units in SEZ. Okay. Then clause 2 or clause 3 of section 16. Or section 16? Yes, what is section 16? This all you have done in IPCC, so you should be knowing what is section 16. Deduction from the salary, right? So it's saying clause 2 or clause 3 of section 16. What is clause 2 of section 16? Entertainment allowance, right? Entertainment allowance is not allowed. So deduction under section 16(2) for entertainment allowance. You will not get this deduction. 16(3), which is deduction of any sum paid by the assessee on account of tax on employment. What is this tax on employment? Yes, students?
Professional tax.
Professional tax?
Correct. This is the professional tax, right? So this will also not be allowed as deduction. Clear? or the clause B of section 24. Okay, 1 minute. Before we go to 24B, this section 16.2 and 16.3 is saying entertainment allowance and the PT will not be allowed, right? However, what shall still be allowed is standard deduction. So that they are not denying it, right? So here, we are still allowing the standard deduction, right? This is allowed. What is the limit? We will see to it, right? We'll see. 24B. What is 24B? In respect of a property referred to in 23.2. What is 24B, students? Again, this you have done in IPCC.
Interest on income from house property.
Correct. 24B is nothing but the interest on income from the house property. In respect of the property referred to in 23.2. What is the property referred to in 23.2? What is 23.2? Annual value of property consisting of house shall be taken as nil if the owner occupies it for his own residence. So this is the self-occupied property, right? So what they are saying is that the interest on the housing loan shall not be allowed in respect of the self-occupied property. Interest on the loan for self-occupied property will not be allowed. That means what? What shall be allowed?
रेंट पर दे रहे हैं तो वो अलाउ होगा क्या मैम?
Correct. Interest on the let out or deemed let out property shall be allowed under 115 BAC. Are we clear? Yes. So only in respect of the property referred to in 23.2, they have restricted the deduction or the interest claim which is there. Or clause 2A of subsection 1 of section 32. What is this?
Depreciation, PGBP.
Is it depreciation? Yes.
Additional depreciation.
Correct. This is the additional depreciation and not just the depreciation. In fact, depreciation is allowed. What they have restricted here is the additional depreciation. Okay. Yes, Venkata, I'll explain again the SOP one. So here, what they have restricted is additional depreciation claim is not allowed, but what is allowed is the normal depreciation. So normal depreciation will not be denied. Additional depreciation will be denied when you claim 115 BAC. So Venkata, what I was saying is that interest on the self-occupied property up to rupees 2 lakh that you claim is not allowed under 115 BAC. But if you claim the interest on the let out or deemed let out property, then in that particular case, you will be allowed the deduction under 115 BAC for that interest. Okay. Or section 32 AD. What is 32 AD? Yes. What is 32 AD?
Specified business.
No, it's not specified business. That is 35 AD. This is investment in respect of plant and machinery in notified backward areas, although this section is no more applicable. So we are not writing this particular section, right? 35 AD is specified this business Manpreet. 33 AB, this is tea, coffee, rubber development. So any deduction of capital, a deduction of, you can write the expenditure for tea, coffee, rubber, right, which is under 33AB. Then 33ABA, that is for 33ABA is what? Yes.
Specified
Site
business.
restoration. Site restoration fund. So expenditure that is also not allowed. These are the sections we learn in the PGBP class. Then what additional they have said it? Or subclause 2, 2A, 3 of subsection 1 or subsection 2AA of section 35. What is 35? Again, you have learned this.
Scientific
Expenditure
research.
on scientific research, right? Now here what they are saying is, be very careful over here. They are saying subclause 2 of section 1. Section 1 is in respect of expenditure on scientific research, the following deduction shall be allowed. Subclause 2 is basically the expenditure for the scientific contribution or any sum paid to the research association which has the object of undertaking of scientific research or to a university, college or institution, right? So let us write down what is not allowed.
Sure, how to help you with that?
Alexa, volume 5%. Sorry. Okay. So basically, let's say the expenditure for scientific research, right? So what are the expenditures which are not allowed? Contribution to the university or research association. Right? Then what they are saying is subclause 2A of subsection 1. What is subclause 2A of section 1? Any sum paid to a company to be used for scientific research. So contribution to the company for scientific research. Then they are saying subclause 3 of subsection 1. So 3 or subsection 1 is sum paid to a research association which has the object of undertaking research in social science or statistical research or to a university, college or other institution. So contribution to university or research association for social science or the statistical research. This is first one for the contribution to university or research association for scientific research. Correct? So these are the deductions which will not be allowed under 35. Second is 35 to AA. What is 35 to AA? Pays any sum to the national laboratory or university or IIT for scientific research undertaken, right? So contribution to national laboratory or IIT. These are deductions which are not to be allowed under section 35. So therefore, what is therefore allowed? So whatever deductions they have not covered over here. So if you see 35 has many other deductions. right? So whatever is not covered is basically still allowed. So whenever you are making any contribution to the outsiders, to the national laboratory, to the IIT, to any other company, to any other research association for carrying out statistical or scientific research, or to any other company, these are not allowed. But any expenditure which you undertake for your own business, your own scientific expenditures, right? Any in-house contribution that you are making, any in-house expenditure that you are doing, that is still allowed. Even the capital expenditure on scientific research. Are we getting this particular point? So what is not allowed is the contributions that we are paying to the others for scientific expense. But any contribution that we are incurring for our own self, like for our own business in-house, that is something which will still be allowed under section 115 BAC, students. Are you getting this particular point? So any scientific research expenditure which is for our own business, including the capital expenditure, including the prior period expenditure, that will be allowed under 115 BAC. Are we clear? Yes or no? Is this clear or no?
Yes, ma'am.
Okay. So any expenditure which is incurred before the commencement of the business also, that will also be allowed under 35. Guram, what is the logic of interest on SOP not allowed but rented or deemed without? I don't know what is the logic, honestly. If an individual is incurring this for a sole proprietor business, is this allowed as business and individual are different person? No, this is not allowed even in respect of the individual undertaking the sole proprietor, because these are not given to the individual himself, but only when he does the business, these are business deductions only. So even in the case of sole proprietorship, these will not be allowed. So what is allowed over here is expenditure for scientific research for own business, including prior to commencement, including expenditure, capital expenditure. So not all capital expenditure, but capital expenditure for scientific research, including the capex for scientific research, right? But excluding expense on land purchase. Are we clear? So this is something which is allowed. Yes or no? Other company for the sake of our own company, yes, it's still not allowed. So if you pay the scientific research expenditure for, so you will pay of course for your own only. But even if you pay to outsiders, that's not allowed. So what you can, write over here is, just in short for your remembrance purpose, contribution to the outsiders for the scientific research is not allowed. And in-house contribution or expenses is allowed. Clear? Then they are saying 35 AD. 35 AD is nothing but your specified business deduction. Deduction under section 35 AD for the specified business is not allowed. And deduction under 35 triple C, which is again in relation to the agricultural projects, that is also not allowed. Or any other provisions of chapter 6 6A. Chapter 6A is deductions. So chapter 6A deductions you'll not be able to claim. Other than the provisions of section 80 CCD 2. What is 80 CCD 2?
National contribution by the employee to the national pension scheme.
80 CCD 2. Let us look at it. What does it say? So 80 CCD. This is contribution by the employer to the national pension scheme, right? So 80 CCD 2 says, where in the case of the assessee referred to in subsection 1, who is basically employed, right, or self-employed. In this particular case, if the central government or the state government or any other employer makes any contribution to his national pension scheme account, right? This is the national pension scheme which is covered, right, under 80 CCD 1. The assessee shall be allowed the deduction, which is 14% in case the contribution is made by the central or state government, 10% where the contribution is made by any other employer of his salary. However, provided that is exception, where the total income of the assessee is chargeable to 115 BAC 1A, where the total income is chargeable under 115 BAC 1A, the provision of subsection 2 shall have the effect as if the words for the 10% referred to in clause B, the word 14% had been substituted. Are you getting this point? So 80 CCD 2 says that in case you opt for, in case you go under the default tax regime, I'm not using the word opt for because this is the default regime. I'm not opting in. I have to opt out if I want to go out from this. So 80 CCD 2 says then is 14% of the salary. This is the employer contribution to the national pension scheme. So in case I go for the normal tax regime, I'll be only allowed 10% if I'm not covered with the central government or state, if I'm not working with the central or the state government. But if I am under 115 BAC, default tax regime, then the deduction shall be 14%. And this is allowed. Are we clear? Yes or no?
Yes, ma'am.
Okay. Then it is saying, or subsection 2 of 80 CCH. What is 80 CCH? Agnipat scheme. Contribution to the Agnipat scheme. This is also allowed. Next is 80 JJAA. Deduction for new employees. So these are the deductions which will be allowed. Yes or no? Yes? Is this
Yes,
clear,
ma'am.
students? Yes? So these are some of the deductions which are allowed in respect of the 115 BAC. Are we clear? Okay. Now what it says is without set off of any loss carried forward or depreciation from any earlier assessment year, which means I'm talking about the brought forward losses or the unabsorbed depreciation. if such brought forward loss or unabsorbed depreciation is attributable to any of the deductions referred to in clause 1. Meaning if I have computed if my brought forward losses or unabsorbed depreciation, first let's talk about the brought forward losses. If my brought forward losses are computed by claiming these deductions of, let's say, 33AB, right? Or let's say 35AD, or scientific research expenditure which is not allowed, right? Or let's say, for example, if I have the house property loss which is in respect of self-occupied property brought forward, then these brought forward losses will not be allowed. Are we clear? These brought forward losses will not be allowed. So they are not saying that this will not be allowed. They are not saying that all brought forward losses will not be allowed. They are saying that only the brought forward losses which are in respect of these deductions or exemptions which are not allowed will not be allowed. Okay, so just write it over here. Oops, sorry, not business loss, brought forward losses in respect of deductions or exemptions not allowed will also not be allowed. Okay, or any unabsorbed depreciation. Now, unabsorbed depreciation is allowed, but unabsorbed depreciation which is pertaining to the additional depreciation will not be allowed. Okay, so because that's the prohibited one, relating to the additional depreciation. So that means what is allowed is any other brought forward losses not pertaining to prohibited deductions or exemptions, or your unabsorbed depreciation relating to my normal depreciation. This is allowed. Okay. Next is without any exemption, without any set off of losses under the head income from house property with any other head of income. So basically the income from house property, the loss under the head house property will not be allowed to be set off with any other head of income. Are we clear? So any loss which is there under the house property, that will not be allowed as the deduction against any income. Right? So in case of the let out property, see, interest on the self-occupied property is any which way is not allowed to you under 115 BAC. But in case of the let out property also, any loss that is happening, that is your interest more than your rental income, that will not be allowed to be set off against any other head of income. Are we getting this? Yes or no? See, interest on self-occupied property is any which way is not allowed to you. Correct? 24B is telling you that interest is there on respect of the self-occupied property. We will not allow you to claim it as a deduction. But in case in the current year also, they are not talking about any brought forward. They are talking about the current year loss in respect of the house property. Because now the only house property remaining is the let out property for which you have been allowed the deduction of interest. So if there is any loss happening under the house property, that will not be allowed to be set off with any other head of income. So this is current year. This is not the last year. last year तो वैसे भी, like see, the last year brought forward losses which are there can only be set off against the house property income. Set off against other income. It is the current year loss that you can set off against the other heads of income. Are you getting this point, students? So income from, sorry, loss from house property in respect of my let out property not allowed to be set off against other heads of income. And this is the current year loss. Are we clear? Any doubt, any question? Is it clear? Yes or no, students? Is this point clear to everyone?
मैम हाउस प्रॉपर्टी वाला एक बार दोबारा
Yes,
एक्सप्लेन
ma'am.
Sure, I'll explain again. See, students, what they are essentially trying to say over here is, let us read it once again. See, यहां पर क्या बोला हुआ है? While you are computing the total income, you will not claim any deduction for the interest on loan. 24B is what? Interest on loan in respect of property, which is the self-occupied property. Right? In respect of property, which is self-occupied property. Meaning, deduction of interest for the self-occupied properties, any which is not allowed under 115 BAC. Clear? Then they are saying without set off of any loss under the head IFHP with any other head of income. Are we clear? So any other head of income which is there, so any loss under the head income from house property with any other head of income. So यहाँ कौन सा property बच गया? In the above case, correct. In the above case, they are saying that interest on the self-occupied property is not allowed. Right? So self-occupied property के लिए तो interest कभी मिलेगा ही नहीं 115 BAC में. What is still remaining is the interest on let out property is allowed. Correct? But they are saying if you incur the loss, then in that case, we are not allowing the set off of that loss with any other head of income for the current year. Are we clear? Because interest on the let out property, we are allowing you as a deduction. But if your interest is more than the rental income, means you incur the loss under the head house property, then that loss will not be allowed to be set off against the any other head of income. And this is the current year loss. This is not brought forward. Because agar brought forward house property loss hai, it can only be set off against the house property income. It can't be set off against other head of income. Brought forward losses are to be set off against the same head of income. It is the current year losses that we set off against the other sources of income or the other heads of income. So this is talking about if there's a current year house property loss, which is in respect of the let out property, that we will not allow it against any other head of income. Are we clear?
Yes, ma'am. Yes. Now clear.
Without any exemption, by claiming the depreciation, if any, under any provisions of section 32, except 2A of subsection 1. 32 is what? Depreciation. Normal depreciation allowed, except additional depreciation, which is covered under 32(1) 2A. Determined in such manner as may be prescribed. Prescribed where? In the rules. So the rates of depreciation are given under rules, so that same rates will be allowed. Without any exemption or deduction for allowances or perquisites by whatever name called, provided under any other law for the time being in force. So, okay, this is fine. The loss and the depreciation referred to in subsection 2(2), which is basically this, right, shall be deemed to have been given full effect to, and no further deduction of such loss or depreciation shall be allowed for any subsequent year. So basically they are saying that whatever these depreciation or the losses that we are not allowing, these will be understood, or other than the ones which we are not allowing will be allowed basically. Are we clear? Provided that, now this is not applicable for your attempt. Okay. So what they are essentially trying is to say is that these are the exemptions or deductions which shall not be allowed. Clear? Then one more provision which is allowed over here in case of a person having a unit in the International Financial Service Center. Then in that particular case, the deduction under ATLA shall still be allowed. So what is the other deduction which they are allowing over here is ATLA. For the unit in IFSC. ठीक है? Clear? Yes or no? Any questions? Any doubt? Okay. Then they are saying notwithstanding anything contained in subsection 1A. We are reading 6. 5 is not applicable now. Notwithstanding anything contained in subsection 1A, meaning this section is again overriding 1A. 1A is providing you the tax rates. Shall apply to a person where an option is exercised by the such person in the manner as may be prescribed for any assessment year, and such option is exercised on or before the due date of 139(1). So basically 115 BAC will not apply in case you exercise the option for opting out of 115 BAC. Now you can opt out of 115 BAC in respect of business or profession in case of income from in case of a person having income from business or profession, he can only opt out once, and such option once exercised shall apply to the subsequent assessment years also. Are we clear? So once the person who has business or profession, if he opts out, the option closes. But it says provided that the option for the person who is having the business or profession once exercised for any previous year can be withdrawn only once. So he can come back only once for the previous year. And thereafter, he will never be again able to exercise the option of opt-out except where the person ceases to have any income from business or profession. Are we clear? So just write it over here. Option to opt out for person having PGBP, can opt out, but once exercised shall apply to all other previous year. Right? So what will apply to all other previous year? Then the normal tax regime. Right? But he can withdraw this option once. So basically can come back to 115 BAC only once. And then no option to opt out again. So you can come back to 115 BAC, you can withdraw that option only once, and then no option to opt out again unless business ceases. Fine. And for others, you can exercise option to opt out every year. Right? So person who are into the employment income, having other income other than PGBP can decide to come and go out anytime they want it. Manpreet, so loss in house property in current year can be brought forward to the next year and can be set off next year with the house property income. That's right. That's right. Very good observation. Yes, Venkata, this loss which is there, loss from the house property, this cannot be set off against other heads of income. But yes, this can certainly be carried forward. This is very good. Right? Okay. Are we clear? Any doubts? Any question? Okay. So you have to exercise this option before filing return of income. In the manner as may be prescribed means, again, it is prescribed in the rules. You have to file separate to opt out of this 115 BAC. So that is prescribed in the rules, right? Any question, any doubt? Unit in IFSC is allowed. Yes, ATLA deduction is allowed. Okay. Any question, any doubt? So is 115 BAC clear up till this point? Yes? Okay, perfect. Okay, any questions? Okay, so I think we can take a break over here, but I think ma'am has to make certain announcement.
Hello, students. Am I audible, Prerna?
Yes, ma'am.
Hello,
Yes,
ma'am.
students. Yes, students. For these classes, I have an important announcement to make. As of now, as you know, the schedule is Tuesday in the evening 6 to 9 and Sunday in the morning 7 to 10. But from 1st August onwards, your classes will be on Tuesday and Thursday 6 to 9 p.m. So accordingly, your next class will be on Tuesday, 29th of July. Then your next class will be on 5th of August, Tuesday. And then Tuesday, Thursday, evening 6 to 9 p.m. Is it clear, students?
Ma'am, it's Tuesday or Friday? Oh, sorry,
Tuesday
Thursday
and,
or Friday?
Tuesday and Thursday.
Tuesday and Thursday. Okay.
So accordingly for the other classes also, because Thursday evening currently, I guess, IDT classes are going on. So accordingly for AFM, IDT and DT, all three classes schedule has been revised. So students, please kindly go through the BOS knowledge portal. That's revised schedule will be uploaded on the website at BOS knowledge portal. But for DT paper, it will be on Tuesday and Thursday evening 6 to 9 p.m. Clear, students?
Yes, ma'am.
Okay.
Yeah. Okay, students. So let's take a break over here for 10 minutes and then we get back.
Ma'am, can you please show the chart?
Yeah. Okay. Let's take a
Okay.
break over here. Now that we have finished 115 BAC, now let us talk about what are the obligations in terms of the rebate over here. Okay. So rebate is given under which section, students?
89.
No, it's not 89.
87A. 87A.
Correct. It is given under 87A. Right. So rebate we will talk about. We will also talk about what are the rates of surcharge for the normal versus 115 BAC income, and what is the cess. Cess is of course common. So first we'll talk about the surcharge. Okay. Now surcharge is given where in the Income Tax Act? Where does you where do you get surcharge from? Yes.
In part 3, finance bill.
Correct. Very good. So surcharge is nowhere given under the Income Tax Act, students. The surcharge comes from the Part 3 of the Finance Act. It doesn't come from the Income Tax Act. So don't make a mistake that this is mentioned somewhere in the Income Tax Act. No. This comes from the Schedule 1, Part 3 of the Finance Act. There you will get the rate of surcharge. Venkata, your question, one-time opt-out is applicable for those who do intraday or FNO? Yes, intraday or FNO is considered as the business income. It is not speculative. Intraday is speculative, but FNO is not a speculative income. Right? So even in that case, if it's considered as a business income, then you will have only one-time option to opt out. That is correct. Okay? Yeah. So the first schedule, the part 3, talks about your surcharge on the income tax. Right? Remember that thing very, very clearly. So now when you have to look for surcharge, you will look where? You will look into the part 3. Now, in case of the 115 BAC, the surcharge, what are the surcharge rate? Yes. So let us look at the part 3 to the Finance Act 2025, right? So it says the surcharge on income tax, right? What is the surcharge on the income tax in the case of every individual HUF, AOP, BOI, artificial juridical person? This is sorry for a non-resident. We have to look at for a resident. 1 second, we are looking at wrong. Yeah. So this is for the surcharge, okay? Now, what is the surcharge that we have to consider over here? It is if your total income, let us write it down simultaneously over here. So here I am writing for the surcharge. Okay. So if my total income is more than 50 lakh, this is dependent on my total income, but less than equal to 1 crore, then what is my surcharge? This is 10%. Correct? Then if my total income exceeds, yeah, surcharge is tax on tax. That's right. If my total income is more than 1 crore, but not exceeding 2 crores, right? So if my total income having more than 1 crore, but not exceeding 2 crores, then in that particular case, the surcharge shall be 15%. Now, after this, there is a catch. So here, if you would have seen, they say having a total income, including the income by way of dividend, 111A, 112A, right? So this is including all my income. Right? This is including all my income. However, in the case of the third part, if you see, it says total income excluding. This is saying total income excluding the income by way of dividend or 111A, 112, 112A. So for first and second, where the income is exceeding 50 lakh but less than 1 crore or 1 crore less than 2 crores, in those cases it is including dividend, capital gain, and on all the income surcharge would be 10% and 15%. But when it comes to the total income excluding the dividend and capital gain exceeds rupees 2 crore. So if your total income my excluding dividend LTCG under 112A or STCG under section 111A is greater than, sorry, not equal to, it's greater than. This will be 25%. Are we getting this particular point? So that means what? That where the total income is excluding only dividend, capital gain is increasing 2 crore, only then 25% will be applicable. So where my income is there in respect of dividend, capital gain, or one short-term capital gain, long-term capital gain, in those cases, my surcharge will be restricted to 15%. So for my STCG under 111A, LTCG under 112 or 112A, or my dividend, even if it exceeds rupees 2 crore, the maximum surcharge that will be applicable is 15%. That shall not go beyond 15%. Are we clear? Yes or no? Fine. So in case I have the income, yes, this is excluding the dividend, as I said, Venkata, after 2 crore. So as I said that in case I have the income, which is LTCG, STCG or 112A, 112A, in that case, the maximum surcharge shall be 15%. Even if my total income exceeds rupees 2 crores. Are we clear? Yes or no? Now
Yes,
this
ma'am.
for the default regime which is there. So let me give you an example from your module also. Let us discuss one example from the module about the surcharge rates. So if you look at it, see, in the first case, they have said that dividend is 15 lakh, STCG under 11A is 15, LTCG under 112 is 25, and LTCG under 112A is 20 lakh, and other income is 25 lakh. So what will be my surcharge over here?
Ten percent, ma'am.
10%.
Correct? 10%
Because
everybody.
income is 85 lakhs.
Correct. So here it will be 10%. Right? Now in the second case, it is saying dividend 10, STCG 35, LTCG 112 50, LTCG 112A 35, and other income 55. So what will be my surcharge over here?
Ma'am,
Total
15.
income is
Total income is 130 lakh.
130 or how is it?
total income is
15%.
1.85 crore, ma'am, which is
Yeah,
less than 2 crore, 15%.
correct. This will be more than 1.85. So this will be 15%. Yes. Next is where the dividend income is 51, STCG 111A 44, LTCG 112 42, LTCG 112A 55, and other income 6 crores. Now my total income, if you look at it, is more than 2 crores. So what will be my surcharge over here?
It's generally 25%, but income is included the special tax rate, that's 15%. Then
Will not exceed 15%.
On the entire income or only on dividend LTCG?
On dividend,
Dividend.
STCG, LTCG, 15%, and other income 6 crores will be at 25%.
So in the case of LTCG, STCG, and the dividend, right, there the surcharge will be 15%. On the other income, there will be surcharge of 25%. Are we clear? Okay. Next example is dividend is 40, STCG 35, LTCG 112 42, LTCG 112A 50, other income 1.1 crore. Now, though my total income is more than 2 crore, so what will be the surcharge over here? 25?
25%.
No. Here, my income excluding the dividend STCG, LTCG should be more than 2 crore. Here, my income including that is more than 2 crore. So here, the surcharge will be only 15% because my income other than dividend STCG, LTCG is not more than 2 crore. It is only 1.1 crore. Are you getting it? In the earlier example, my other income was 6 crores. But in this example, my other income is 1.1 crore. So what they have said is that the income excluding these should be more than 2 crore. Only then surcharge of 25% becomes applicable. Are you following this, students?
Yes, ma'am.
Yes. Now, in case I opt in for the default tax, opt out of the default tax regime, right? If I opt out of the default tax regime, so this was surcharge under 115 PAC. But if I opt out of the default tax regime and I go for the normal income tax regime, then in that particular case, my surcharge will be different. I'm not writing it again, but you are supposed to write it again. Okay. So this is surcharge under my normal tax regime. So here there is one more addition that we have to make, which says total income, again excluding dividend, LTCG, STCG. This is 112A, 112. If it exceeds, sorry, this is more than 2 crore and less than equal to rupees 5 crore. If this is more than rupees 5 crore, then my highest surcharge goes to 37%. But again, in respect of the dividend, LTCG, STCG, in that case, my maximum surcharge will still remain as 15%. So, okay. So my maximum surcharge under the old regime in case of dividend, LTCG, STCG will still remain this is 111A, will still remain the 15% itself, plus the dividend also here. Even if the total income exceeds rupees 2 crore, right? So that will still remain. But if my total income here is more than 5 crore, we have an additional surcharge of 37% here, which was not there in the default tax regime. Are we clear? Yes or no? Any questions?
Yes.
Yes, ma'am. Yes, ma'am.
Okay, fine. So this is the about the surcharge. And then you have to add the education cess of 4%, health and education cess of the 4%. Now coming to the last part, which is the rebate under this. Rebate under section. So here I'm adding also the cess, which is 4%, both cases. Now coming to the rebate under section 87A. Let us go back to our Income Tax Act. Let us look at the 87A. Okay. Now, rebate of income tax in case of certain individual. Mind it, this is applicable only for the individual, that too only a person who is resident in India. So, rebate is not available for HUF, AOP, BOI. So, rebate is only available for resident individual. Now again, there is a difference over here. What is the difference over here? So it says where the total income does not exceed 5 lakh, you will be entitled to a rebate of total income, tax liability, or rupees 12,500, whichever is less. Provided that, means it's an exception, where the total income of the assessee is chargeable under 115 BAC 1A and the total income does not exceed 12 lakh. Here you will say it's 7 written over here, but they have amended. See, word 12 shall be substituted for 7. So where the total income does not exceed 12 lakh, the assessee shall be entitled to a deduction from the amount of income tax on his total income with which he is chargeable for any assessment year. And this is the income tax as computed before allowing for the rebate, right? Of an amount equal to 100% of income tax or rupees 60,000, whichever is less, right? 60,000. Oh, sorry, the screen is not shared. One second. Okay. Is this available now? Okay. So the total income does not exceed 12 lakh. And in that case, the rebate will be how much? 60,000 rupees. Are we clear? So when you are now calculating rebate under 87A, there has been an amendment. If you look at the 115 BAC default regime, and this is my normal tax regime. Under the normal tax regime, if my total income is not exceeding 500,000, which is basically 5 lakh, my rebate shall be rupees, how much? 12,500. However, under 115 BAC, if my total income is less than rupees 12 lakh, my rebate shall be rupees 60,000. Are we clear about this? Yes or no? So under the default tax regime, my rebate is 60,000. Okay? Are we clear?
Yes, ma'am.
Fine. So this is the difference between the old regime, which is 115 PAC, and the new regime. Yes, it is updated in the new study material. Okay. Manpreet, you have a question. If LTCG, STCG dividend is less than 50 lakh and the other income is more than 2 crores, we will apply 25% surcharge on the other income, but we will apply 15% on LTCG, STCG? No. See, in case your total income, including the dividend, is more than rupees 1 crore, right? But less than 2 crore, then yes, you will apply the dividend income and LTCG, STCG surcharge of 15%. Now, even if your LTCG, STCG is less than 50 lakh, you will not go with surcharge of 10% because what does the law provide? That the total income, including the dividend, if it is exceeding 1 crore, then the surcharge of 15% will be applicable. Are we clear? 87A rebate, it is 12,500. If include the special tax rate of tax, can get still 87. Okay, this is a very, very good question. So, on the special incomes, which are there, right? Now, in respect of rates are not available. Now, you have to read to that particular section like 11A, 112. So, if I, tell you 111A, it says that the tax rate which is there is a final rate which is there. You will not be getting any chapter 6A deductions or any rebate in respect of that. Are we getting it? So wherever, if they have not said it, then of course you can get the rebate. But if case they have said that no rebate shall be allowed, then in that particular case, you will not get any rebate. Clear? So if the section is not restricting you any rebate, then there is no problem. But if the section itself restricts you that the deduction and the rebate shall not be allowed, then you will not be able to get it. Otherwise, you can of course claim the rebate under 87A. Are we clear? Any other question? Any doubt? Is this clear? Yes or no?
Yes, ma'am.
Okay. So finally, this 115 BAC, if you look at it when in the question, like in the exam, how can you get this question? You will get a question on the basis of like the full-fledged computation. You will not get a question only to calculate the tax rate. Now you are in the CA final, right? So when you look at the questions asked in the examination, the question will be a full-fledged question. Are we clear? So you will get the question like, computation of the total income, deductions, allowances, whatever are there. And then you will be required to identify as to what is the tax rate, which is beneficial. So if the question tells you that ignore the normal tax provision or old tax regime, then you will have to ignore. But if it says that if it doesn't say anything, it just says that calculate the tax liability, then you have to make a comparison between what is beneficial for the assessee. You have to make a comparison of 115 BAC and you have to also make a comparison of the normal tax regime and what is beneficial out of that. Are we clear? Any question, any doubt? Yes? Okay. What is MTR, Venkata? MTR versus rebate, I didn't get it. Yes. Marginal tax relief. Okay. So marginal tax relief, Venkata, is basically when your income marginally exceeds, then in that particular case, you get the relief in respect of the excess tax that you are paying. So that is basically the marginal tax relief. Okay. Fine, students. In income tax, where is given an income tax return form, because to which form to belong to which person, suppose someone is employed but still doing FNO. Okay, which ITR to select, you have to go to the rules, Gurram. Which ITR to select, you have to go to the rules to decide which ITR you have to select. Okay. Yes, there is. Is that MTR the same rule with 115 BAC and normal tax? Yes, it's the same thing. No difference per se. So the marginal tax relief, Venkata, is basically in relation to when your income or your tax, like, marginally increases, because let's say you have an income of 1 crore 10 lakhs. So there is like, a marginal increase because of which you are now liable to a higher surcharge. So in that particular case, you are required to calculate the marginal relief, right? So marginal relief basically protects you from having that additional surcharge which is applicable because your income is increasing marginally, right? Now what you have to do is, so let's say where your total income is more than 50 lakhs but less than 1 crore. So you have to compute the income tax on the total income. Whatever your total income is, calculate the surcharge on that. Then you have to compute the income tax only on, let's say, rupees 50 lakh, because your total income has, let's say, increased by 50 lakh 10,000. Let's suppose. Okay. So in that particular case, your income has marginally increased, right? So you have to compute the total income without, like on the 50 lakh exactly, right? And now once you have computed on the 50 lakh exactly, you have to basically reduce the differential amount between the total income, let's say 50 lakh minus the 50 lakh 10,000. So in the step 3, you will only calculate the income which is there 10,000, right? And then you have to add the 10,000 rupees which is there, which is the incremental amount between the difference of the income tax on 50 lakh minus the 10,000. Are we getting it? So first you have computed your total income and you have computed the tax on it. Step 1. Step 2 is compute the tax on exact 50 lakh or exact 1 crore. Right? Or exact 2 crore. Whatever your amount is there, the starting point. Okay. Then you have to identify what is the difference between the marginal amount which is increasing. So total income minus 50 lakh or total income minus 1 crore, total income minus 2 crore, whatever it is. Okay. In the step 4, what you have to do is, when you have computed the tax on that 50 lakh, 1 crore, 2 crore, whatever it is, so that amount you have to add in that step 3. Step 3 was the marginal income and you have to add the tax amount which you have calculated on 1 crore, 2 crore, 3 crore, whatever. The final step will be your determination of the income tax liability. So that will be lower of your actual income tax that you have computed on the total income or the marginal relief that you have calculated. Right? So if your total tax is more than your marginal relief, then the marginal relief will be basically the income tax minus the relief that you have calculated. Are we clear? Any other question? Any other doubt? Yes. Okay. Yes, on the special rates, you won't be able to claim the tax rebate under 87A. You won't be able to claim the tax rebate under 87A on the special rates. That is correct. That is very, very correct. Okay, any other question? See, last year there was some confusion regarding the claim of the tax rebate on the STCG, LTCG, because they had allowed it for the old regime, but they had not allowed it for the new regime. But this year onwards, they have given the clear cut point that rebate will not be allowed on the special tax regime. Okay. Any other point? Fine. Now let us move forward towards the next part, which is the tax rate for the firms. Okay, so let's write down. This will be updated, Venkata, as and when we will have the lecture on the assessment of various entities. You will get the updated module for that as well on the website. Okay. So next is for the firm. Sorry. Firm includes LLPs also, right? Partnership firm includes the LLP also. Now, what is the tax rate for the firm?
30%.
Correct. 30% is the tax rate. It's a flat tax rate without any slabs, right? So for the firm, the tax rate is 30%. What is the surcharge? Yes. No, that's for the company, Venkata. So the surcharge is if the total income exceeds 1 crore, then the surcharge is 12%. Are we clear? The surcharge is 12%. Now, if let's say, for example, the firm has the income under the covered under 112, 112A, then in that case, what will be the tax rate? What will be the tax rate? No, not whichever is lower. If they have a special income, then what will be the tax rate?
Specified rate.
Specified rate, correct. So in case there are special rates, so then special rates will be applicable and not this particular general rate. Yes, at the rate specified in the act. Clear? So basically, you can write it over here. Any income chargeable to special rates, that will be at the special rates. Example, 111A, 112, 112A. Okay. Now, where is this 30% coming from? Under the act, somewhere it is written 30%.
Schedule 1 Part Finance Act.
Schedule on the Finance Act. That's right. So this particular amount is coming from the Finance Act itself, right? This is not given under the Income Tax Act, which is basically Schedule 1, Part 3, that gives you the rate with respect of the firm. Are we clear? Yes or no? So this is about the firm. Now, next is with respect to the cooperative society. So let us write down.
Ma'am,
Yes.
here total income includes the special income, everything.
No. Total income. Okay, here for the surcharge you are saying?
Yes, ma'am.
Yes. Here it includes the special income also.
Okay.
Okay. Now next is the cooperative society. So again, for cooperative society students, we have the tax rate given under the first schedule, which is the normal tax. And we have a special provision also. So let us look at it. In the case of every cooperative society, the normal tax is where the total income does not exceed 10,000, it is 10%. Total income exceeds 10,000 but does not exceed 20,000, it is 1,000 plus 20% of the amount exceeding 10,000. Where the total income exceeds 20,000, it is 30%. Okay, 3,000 plus 30%. So basically, they have the normal tax regime, which is up to rupees 10,000. This is 10%. 10,000 to 20,000, it is 20%. And greater than rupees 20,000, this is 30%. Fine. And then they have the optional tax regime, which are basically two. They have two optional tax regime. So what are the rates which are given under the optional tax regime? What are the two optional tax regime for the cooperative society? So cooperative society has two optional tax regime, 115BAD and 115BAE. Okay. Let us first look at 115BAD. It says again, notwithstanding anything contained in this act. What is this?
Non-obstant clause overriding it.
It is overriding all the other provisions of the act, but subject to the provisions of this chapter, which is basically the tax rates, which are special tax rates, will continue to apply. So this section, although it overrides all the other sections, but any other income which are chargeable at the special rates, on them the special rates apply. 111A, 112, 112A, these will continue to be taxed at special rates even when you are opting for 115BAD. Other than those mentioned under 115BAE, because 115BAE, if you are opting for 115BAE, you will go for 115BAE. If you go for 115BAD, you will go for 115BAD. Fine. The income tax payable in respect of the total income of a person being a cooperative society resident in India for any previous year relevant to the assessment year on or after 1/4/21 shall at the option of such person, meaning these are optional tax regime. These are not the default. The default is normal tax. Be computed at the rate of 22% if the conditions contained in subsection 2 are satisfied. So basically here, what is the tax rate that we have? This is 22%. Are we clear? This is the 22% tax rate which is applicable over here. If the conditions are satisfied, provided that where the person fails to satisfy the conditions in subsection 2, in computing its income in any previous year, the option shall become invalid in respect of the assessment year relevant to that previous year and also the subsequent assessment years, and the other provisions of the act shall apply as if option had not been exercised for the relevant year. So basically, if you fail to satisfy any of the conditions under subsection 2, then you will not be able to exercise this 22% rate. You will be governed by the normal tax rate. Now, what are the conditions? The income of the total income of the cooperative society shall be computed without any deduction under 10AA. So basically, here you are not required to compute. So total income computed without deduction under 10AA. What was 10AA, students?
Units in SEZ.
Correct. This is for units in SEZ. Next is clause 2A of subsection 1 of section 32. What is that?
Additional depreciation.
Correct.
Depreciation.
So additional depreciation is also not allowed. However, we will get still the
Normal
what is
depreciation.
correct. So I'm writing what is allowed for both the regimes. Okay. This is the normal depreciation. Okay. Or 32AD we had seen this is not no more applicable. 33AB, 33ABA, what are these?
33AB tea, coffee, rubber.
Correct.
33ABA site restoration.
So I'm not rewriting again. Okay, 33AB, 33ABA. Subclause 2, 2A or 3 of subsection 1 or 2AA of section 35, which is basically this only. Right? So any expenditure for contribution to the Scientific Research Association is not going to be allowed. Right? So this is not going to be allowed in respect of any contribution to any research association. But when you do any in-house scientific research expenses, that will be, of course, allowed. Are we clear? So I'm just putting the same point over here as well. Why is it not getting pasted? Yes. Okay. So expenditure for scientific research, contribution to research associations, for scientific research, contribution to any company, contribution to national lab is also not allowed. What is allowed is in-house expenditure. Then 35 AD is the specified business deduction. So that is also not allowed. Right? So 35 AD is also not allowed over here. Let me just put it everything. Sorry. Okay. So 35 AD is also not allowed over here. Then what is additionally not allowed is chapter 6A deduction. Fine. So chapter 6A deductions are also not allowed other than the provision of 80JJAA. So here you can claim 80JJAA you can claim. Okay, this is claimable. Then without any set off of loss carried forward, meaning any brought forward losses pertaining to these deductions or exemptions will not be allowed. Any unabsorbed depreciation in respect of additional depreciation will not be allowed. But other than that, whatever business losses are there, that you can claim. Right? So that is still allowed. UAD other than pertaining to the or UAD pertaining to normal depreciation is allowed. Are we clear? Then, in case of a person having unit in IFSC, so that will also be allowed. So 80JJAA plus 80LA, both deductions are allowed. Okay? And nothing contained in this section shall apply unless the option is exercised on or before the due date under 139(1). And such option once exercised shall apply to the subsequent assessment years. And once this option has been exercised, it cannot be subsequently withdrawn for the same or any previous year. So here basically you can write that in respect of exercise of option. This is before the due date under section 139(1). And once exercised, this cannot be withdrawn. Are we clear about this section 115 BAD? This is optional regime, right? Okay. Yes or no? Now coming to 115 BAE. Now this is the tax on income of manufacturing cooperative society. Again, how it starts is notwithstanding anything contained in this act, but subject to the provisions of this chapter. See, in 115 BAD, they had said other than 115 BAE. But here they have not said. Here, this is also overriding 115 BAD. 115 BAD was not overriding 115 BAE, but 115 BAE is also overriding 115 BAD. Yes or no? Okay, this is also doing it. Other than those mentioned in 115 BAD. Sorry, this is also overriding it. The income tax payable in respect of the total income of an assessee being a cooperative society resident in India for any previous year relevant to the assessment year after 1/4/24 shall at the option of such assessee, again this is an optional regime, be computed at the rate of 15% if the conditions in subsection 2 are satisfied. So this is for the manufacturing cooperative societies. This is for the manufacturing cooperative societies. And what is the rate? 15%. Are we clear? Provided that means in case where the total income of the assessee includes any income which has neither been derived from nor is incidental to the manufacturing or production, and in respect of which no specific rate of tax has been provided separately under this chapter. Such income shall be taxed at the rate of 22%, and no deduction or allowance in respect of any expenditure or allowance shall be made in computing such income. What does this mean? So this is saying that in case there is any income for which a special rate is there, that shall be subject to special rate. But if there is any income which is not having any special rate and which is not in relation to any manufacturing, then that income will be subject to 22% and no deduction of any expenditure will be given. So in case of any other income not incidental to manufacturing and not having special rate, this shall be subject to 22%. Are we clear? This shall be subject to 22% without any expenditure or allowance. So this shall be subject to the gross rate of 22%. Are we clear? Yes or no? Okay. So let's say if we have income from house property, let's say a company, a cooperative society has income from house property. This shall be subject to 22% without any deduction of any expenditure or allowance. Are we clear? So, provided also that the income tax payable in respect of income being the short-term capital gains derived from the transfer of a capital asset on which no depreciation is allowable under this act shall also be computed at the rate of 22%. So, any short-term capital gain other than of course 111A which are derived from the transfer of a non-depreciable asset shall be computed at the rate of 22%. Are you getting here? Yes or no? So what they are essentially saying, this was not there under 115 BAD, but this is there under 115 BAE. What they are saying is that in case there is any other income that is subject to 22% rate, that is fine. But in case of any short-term capital gain which is arising from the transfer of a non-depreciable asset, right, which is arising from the transfer of a non-depreciable asset, in that case, what shall be my tax rate? 22%. Are you getting this point? So for a manufacturing cooperative society, in case you have any other income which is not taxable at specified rate and which is not incidental to manufacturing, there it will be 20% without any deduction of expenditure. In case of STCG on non-depreciable asset, this will be also taxable at 22%. Yes or no? Is this clear? Yes. Any questions? Any doubt?
No, ma'am.
Fine. So under 115 BAE, this is what the difference is. Correct? In case of between 115 BAE and 115 BAD. Long-term, short-term capital gain which are covered under 111A, that is fine. That will be chargeable at specific rate. But here, any case, any other asset which is there other than the securities which is covered over here, that will be taxable at 22% if it is a non-depreciable asset. Fine, just write it down. So, STCG on non-depreciable asset 22%. However, here no restriction on claim of expenditure. Are we clear? Okay. Provided also that where the assessee fails to satisfy the conditions in subsection 2, the option shall become invalid in respect of that assessment year and subsequent assessment year, and other provisions of the act shall apply as if the option had not been exercised for the assessment year relevant to previous year. So basically, if failure to satisfy condition then in case of 115 BAD, you will go for the normal tax. But in the case of 115 BAE, if you fail to satisfy the condition, you can still go for BAE. Right? If you are not complying with 115 BAE, you can still go for 115 BAD. Clear? Because this section doesn't override 115 BAD. Now you will ask, if you don't satisfy 115 BAD, why don't you go to 115 BAE? Because 115 BAE is specific to only manufacturing company. Okay. Now for the purposes of subsection 1, the following conditions shall be, namely, The cooperative society has been set up and registered on or after 1/4/2023 and has commenced the manufacturing before 31st March 2024. So this is very short window which is given over here. So here, what are the conditions? There are certain additional conditions over here. This is, one is set up and registered. After 1/4/2023 and commenced manufacturing before 1/4/24. Okay. And the business is not formed by splitting up or reconstruction of the business already in existence, does not use the plant and machinery previously used. So, business not formed from split up or reconstruction of existing business and not used old plant and machinery. However, here there is an exception. So you can use the old plant and machinery if it is an imported plant and machinery which was used outside India by any other person, right? And was never used in India and it is imported into India. And secondly, you can also use the old plant and machinery if the total value of the plant and machinery, which is second hand, does not exceed 20% of the total value of the plant and machinery. So basically, you can use here second hand plant and machinery allowed if imported or value of, don't use the word second hand in exam, okay? This is just for your explanation, is less than 20% of total value of plant and machinery. Are we clear? The assessee is not engaged in any business other than the business of manufacture or production of an article or thing and research in relation to or distribution of such article or thing manufactured or produced by it. Okay. So, the condition for the business is, so first is here the incorporation condition. And the second one here is the condition for old business. And third is nature of business. What is the nature of business? Manufacturing or production or distribution of manufactured goods or research. Right? In these cases, you can claim the 115BA. Now, for the explanation, see, explanation is clarifying this. It is hereby clarified that the business of manufacture or distribution or production of an article shall include the business of generation of electricity, but does not include these businesses. Okay. So, this includes generation of electricity. Okay, but what it excludes is development of computer software. So, B, it excludes mining, C, it excludes conversion of marble blocks into slab. And bottling of gas into cylinder. And next is printing of books or production of films. These are not manufacturing. Okay. And the total income shall be computed. Again, the same things are given over here without 10AA, without additional depreciation, without tea coffee rubber development, site restoration, contribution for scientific research, your 35 specified business, right? Or chapter 6A other than 80 JJAA or 80 LA. Without claiming the additional depreciation, but claiming the normal depreciation. Any losses in respect of these deductions will not be allowed. General losses will be allowed. Any unabsorbed depreciation relating to the additional depreciation will not be allowed. Here, one more thing is there, that if it appears to the AO that owing to the close connection between the assessee who has opted for 115 BAE and any other person, the course of the business between them is so arranged that the business transacted between them produces to the assessee who has opted for 115 BAE more than ordinary profits which might be expected to arise in such business. The AO shall, in computing the profit and gains of such business, take the amount of profits as may be reasonably deemed to have been derived, provided that in case the aforesaid arrangement involves a specified domestic transaction, then the amount of profit shall be computed having regard to the arm's length price. And the amount being excess profits in profits in excess of the amount of profits determined by the AO shall be deemed to be the income of the assessee. Now, what they are essentially trying to say is that in case that the assessee has tried to do an arrangement whereby it is trying to transfer the profits from some other business to 115 BAE, because obviously 115 BAE has a lower tax rate. So what assessee will try to do? It will try to transfer the profits from other business here so that it can claim the lower tax over here. And the other business will obviously be subject to 30%, right? So it will try to transfer the profits over here. So where the AO believes that here there is more than normal profits getting stored, right? Because of an arrangement of the assessee with that other person. Then in that case, the AO can, only consider the profits which are reasonably derived from this business. Or in case the value of these transaction between the assessee and the other person exceeds rupees 20 lakh, then it will be regarded as specified domestic transaction on which arm's length price will be applicable. So you learn that in the TP class also. So write it. So amounts more than reasonable profits due to close connection. In that case, here if it is specified domestic transaction, which is transaction greater than rupees 20 lakh with the associated enterprise, ALP applies. Arm's length price applicable. This you will learn in the TP class. Okay. And this income will be taxable at the rate of 30%. So if you see, the income tax in respect of the amount deemed to be income under subsection 4 shall be taxable at the rate of 30%. So this is taxed at 30%. Are we clear? Last point, nothing contained in this section shall apply unless the option is exercised on or before the due date of 139(1). So here also you have to exercise the option before 139(1) for furnishing the first of the return of income for any previous year relevant to the assessment year commencing after 1/4/24, and such option once exercised shall apply to all the subsequent assessment year. Once the option has been exercised, this option shall not be allowed to be withdrawn for same or the any other previous year. So basically what they are trying to say is that you have to exercise here this option before the due date of 139(1) for your first return that you will file as a company or as a cooperative society. And again, once this option is exercised, it cannot be withdrawn. So under 115 BAD, you can exercise the option anytime. But under 115 BAE, you can exercise the option only when you file your first return after incorporating a cooperative society. After that, in the future returns, you cannot opt for this option. And once this exercise cannot be withdrawn. Now coming to the rate of surcharge over here. For a cooperative society, what is the rate of surcharge? The surcharge here is in case the income exceeds the 1 crore but does not exceed 10 crore, it is 7%. And if the income exceeds 10 crore, it is 12%. Okay. So the normal rate of surcharge is total income more than 1 crore, less than 10 crore, 7%, and total income greater than 10 crore, it is 12%. However, in case of 115 BAE, so if you see here 115 BAD and 115 BAE, the rate of surcharge which is given is not the same. This is only when you claim the normal tax regime. But when you basically claim for 115 BAD or 115 BAE, then section 2 of the Finance Act gives you the rate of surcharge. What is the rate of surcharge in that case? It is 10%. It is 10% in that case. Are we getting this particular point? So if you look at the cooperative society which are claiming the 115 BAD and 115 BAE, if you look at section 10, it says in case of every cooperative society except of the income of which is chargeable under 115 BAD or BAE. And in case if I say for 115 BAD or BAE, the surcharge in that particular case shall be 10%. So this 10% surcharge is applicable over here. Plus my cess of 4%. Here also it is 10% plus 4%. Are we clear? And even in respect of income which are chargeable to special rates, here also my surcharge will be still 10%. Are we getting it? Plus even on this other income, here also my surcharge is 10%. And even when I have the 30% tax rate, here also plus surcharge of 10%. Are we clear, students? Yes or no? Any questions? Any doubt? Yes? Is this clear, students? Okay? Yes? Now, understand, students, that now we are only left with the companies. Okay? So that we are going to do it in the next class along with the next lecture that we will have to start. So for that, we will do the company's tax rate. Now we have done cooperative society, so company will be very easy. And we'll also do some cases which are there on the capital versus revenue expenditure. Okay? Or capital versus revenue receipt. Yes, Guram. Of course, when you listen to lecture, there are too many things that, we do it in one lecture. So you will have to revise before you come for the next class. And even today, once you close this class, only then you'll be able to register everything. Okay? Because there are small nuances and we need to remember all of this. So practice is essentially required. Fine. Any other questions? Any other doubt? Okay. So that's all for today, students. Thank you so much. We will meet in the next class. Have a happy weekend. Thank you so much. We can close the session. Yes. Thank you.